Hello everyone, welcome back to Kenspire Business Mantra and yet another interesting episode, a very useful episode this in our journey towards entrepreneurship. This particular topic is costing versus pricing, which is very critical for business success. One of the key success factors that decides the competitiveness of any product in the market is the way you price your product. Normally, uh, many people won't give so much attention to it. We tend to go and compare with so many other people and then try to fix some ad hoc approximate price and then try it out, trial and error, and all those things. In this episode, we will be discussing about certain structured methodologies which may be of use to you in approaching this subject of pricing. Now, one of the critical factors for pricing is your costing, right? How you arrive at your cost. When we talk about cost, there are multiple points which we have to understand. You have to first understand the difference between direct cost and indirect cost. Direct cost means those costs which directly go into the product. For example, direct material, direct labor, which is applied in preparing the product, producing the product, and then factory overheads, direct overheads, which are essential for producing the product. For example, electricity, rent of the factory, and so on and so forth. So these are all direct overheads, direct cost. What are indirect costs? Indirect costs are basically like your other overheads. It can be your administration expenses, selling and distribution, marketing expenses, finance cost, and so on and so forth. So you should be clearly identifying your line items of your business as to which are my direct costs, which are my indirect costs. Step number one. Step number two, arrive at your cost sheet. Now we are coming to the next concept, cost sheet. When it comes to cost sheet, you have to first arrive at your direct cost of production, which will consist of your direct material, direct labor, and direct overheads. That will be your total direct cost. Then you need to add up your indirect expenditure and then add up your profit that is expected out of the operations and then arrive at the selling price. Okay, this is one way of approaching the thing. But the biggest flaw or drawback in this approach is we are going by cost plus method, which means cost plus profit. So a traditional or conventional way is cost plus profit is equal to sales. But the challenge is the market conditions are not captured in this particular methodology because sales or selling price is decided by the market demand and supply. So the contemporary formula is profit is equal to sales minus cost, which means what? Your profit is not in your hands, it is a resultant factor. Your selling price again is technically not in your hands because it is decided by the market. One thing that is in your control is your cost. So the focus is on how you are going to control your cost to be more competitive in the market. That is a relationship between costing and pricing. So when we talk about cost, there is a cost of production, cost of sales, then cost of goods sold. Right? These are all different concepts. Cost of production means your direct cost of production that is expended to bring the product to the finished goods stage. Cost of sales or cost of goods sold is basically adding up the selling and distribution cost and other administrative cost to the cost of production. Now, more importantly, line item wise, how you are going to control these costs, that is the crux you have to focus. One way you to look at it is normally in any manufacturing situation, your raw material cost can hover anywhere between 30 or 40 or 50% of the overall selling price. That is something fixed. There again, you need to be very innovative in your procurement strategies and see how you are going to keep on reducing your purchase cost of materials. Coming to labor, direct labor, work on skilling them, work on innovation, work on automation, work on many areas in order to bring down continuously the labor cost. That's going to be an important subject. As far as other overheads are concerned, keep it very simple, keep it very lean so that you don't spend too much, which is not going to add any value to the customer, right? Let's understand this very clearly. No customer will be prepared to pay for somebody else's extra overheads. Whatever is the value for money for the customer, he will pay for that. So we should be conscious of that aspect. Again, there's a famous saying, profits are made only in shop floor, which means continuous cost competitiveness approach in the production area is critical to control your cost and keep it always at the minimum. Why we are talking about cost? So that we can price the product in a very competitive way and our share of business will go high. That is the whole point, right? The growth comes only from improving the share of business, market share, basically. And unless we are competitive, it's not going to be helpful for our growth. So, this pricing again is a subject which has to be dynamic, which depends on volumes, which depends on customer, it depends on so many factors, and you need to be consciously managing your costing as well as pricing. And most importantly, I've also seen situations where thorough innovative approach in production, in product design, in certain product applications can also give you premium pricing, right? If in your industry premium pricing can be achieved by innovation, by value addition, go for it. So always look at two things: how I can always keep my cost low. Second, how I can make my product much more value adding, much more innovative, so that the customer is ready to pay premium pricing to me, right? So this costing versus pricing is something to be balanced and to be monitored continuously. So any queries on this, please send to this email ID. And with this, we come to the conclusion of this episode on costing versus pricing. Till we meet next time, goodbye and all the best.